Yeah, I don't do any backtesting whatsoever. There's an art to it. You could do it, but in this day and age, there's no reason to do it. If you have capital, you just forward test and collect observations and you can go from there. But many people still backtest. It's just a matter of doing it the right way. And most people, I would say, it's kind of like a lot of other things in finance. Most people will do themselves more harm backtesting than they will do them benefit. You make a trade because, I mean, well, let's say this is the stock price. This is kind of stochastic, but it's sort of supposed to go around this like fair value expectation you have, right? So let's say you got this fair value expectation. And you can see the deviations above and below the fair value actually going to make it a straight line, because when we make a model or a fair value, like we don't have like, we're not like constantly updating it, right? Like we might update it, we get some more information, but it's a step function, right? So like, let's say we got more bullish, they had a good product update. We would step function like up here, right? And then it would stay the same. And maybe they had a good quarter. So we would step function again. And here's where the delta, you can see that the delta is never big enough to take action. Like, okay, that's a little bit overvalued. Here it's a little bit undervalued. Here it's a little bit overvalued. Here it's, for a little while, they're quite undervalued. Like at the very bottom there, maybe it's undervalued enough. Same thing here. And then finally here at this price, this is where maybe we take action. This is some arbitrary percentage, some delta that is big enough that we want to take action. With that arbitrary amount, we want to make a trade. Great. Now here's the problem. We got in this trade, right? Because the fair value that we've estimated, which is the green line, which is absolutely just an imaginary number, right? We came up with this fair value based on our best guess. So it's a guess. It's not, some set in stone thing. And the whole market has more or less the same information we have. So this number, this point, is just our guess as to what fair value is. So now we bought the stock because it's down here. This is the market price. This is the real price, really. Our odds are against us. The academics say there's an efficient market. All the information is known by everybody. There's thousands of hedge fund guys sitting there doing the same thing we're doing. Why would we buy it? Well, we have a lot of conviction that the green line is where it should go and it'll go over time, right? This is the price and it's moving and it's going to keep moving. And there's stochasticity in the market because why is there stochasticity? Well, one of the major reasons there's randomness in the market is the traders in the market will make trades that don't necessarily reflect, one, what we believe, but also good decisions. Right? They may pressure the market with a large sale or a large buy, and that increases the randomness. So whatever this is, you have like a major variability around it. If it's a really like volatile stock, you have a huge variability around it, and you have to expect that. So we make the trade. Why should there be any expectation that this trade will close, the arbitrage will close at any given time? There is none. We think it'll close with time, but we certainly don't think just because we put the trade on that it'll start to close, right? That would be, I think, a little bit wild. Now, people think they can do that. That's called timing, market timing. But the problem with that is it has a bit of a fallacy to it, in my opinion, because you were also saying that at this price, I'm at this delta, okay, I'm willing to take action. But does that mean at this delta, you're not also willing to take action? It's more attractive here. This is one theory of markets. It's not the only theory, as we know. But this is also an attractive delta. But ironically, by buying it, by being willing to buy at the red delta, you're basically and you're willing to buy at the orange delta or the yellow delta. You're basically willing to say that I will, double down or increase my position as it gets more attractive. Now, in trader land, that's a no-no, right? You don't double down. But in investment land, it's gotten more attractive. It's deviated from the green price even more. You can argue like this is, take Sarepta, for example, or you can argue this is a short, just go the other way around. When I buy here, am I expecting it to close? Well, by definition, I wasn't expecting it to close if I'm willing to buy more down here. But what drives this movement? What drives the arb closing, right? It's the other traders realizing that this is the right price. sometimes they might never realize it. What's going to force them to realize it? This is sort of catalyst or psychological trading thinking. And the markets are really run by psychology. I don't like the word catalyst, but I think the idea of traders moving to what you think is fair value over time, you know, when you have this style of investing, you have to be willing to be patient because you were willing to buy based on not a psychological deviation, but a fair value deviation. There are people out there that don't believe the idea of fair value even exists. So if you're subscribing to this market style of investing, which is like a Buffett or private equity style, you are basically kind of willing to say you don't care about timing and you don't care about market psychology because at the end of the day, the deviations in market psychology were what you are exploiting to make your money. If you could predict them, you would not have set the trades like this, right? You would have actually shorted here because you knew it would get to here. You would have set 2 buy orders. You would have set a sell order here and a buy order there. And you wouldn't even worry about the green line. You wouldn't even think about it.
Buyer works.
Guys like him, they're just upset at shorts in general.
Dime, and then they went.
So this guy gives inaccurate short reports. So he's upset at him. But when Springer gives you inaccurate long report. Yeah, this is the kind of stuff that reminds me of like when Alejandro, and again, Alejandro is not, I don't care about the guy. It's what he stands for, and 50,000 or 100,000 or 5 million people like him. It's like you don't want to hear the other side of the story because it's painful. You want to hear this. You want to hear hopium and copium. Quantum is going to 100x. It's going to be bigger than NVIDIA. This doesn't help you unless you have some reasonable brain, you know, thinking about this stuff. Deflecting accountability. Oh, the shorts are they're using crime. Well, maybe you just don't know anything about biopharma. Yeah, so these are the people you're up against, you know, and they definitely don't want to hear something that could be negative, like, I don't know, the founder of the company saying the technology doesn't work. Anonymous, I've shorted stocks like this in biotech before too. The regenerative medicine craze was very similar. There was no FDA approval. Sometimes you just have to, dirty chicks, corrupt. You can write off anything, but like, the smart person like Dusty is like, well, tell me, what do you have to say? Because the only thing I care about is my money, not about being right. I want to make sure I don't lose all this money. What's more important to you, the narrative and the weird club of like people you're joining that don't care about you? Like they're never going to talk to you again. Like the people in Cassava, they were just looking for bag holders anonymous. You can't make 24x without taking enormous risks, like potentially being down as much as 50%. So you have to ask yourself if there's no free lunch. Yeah, it's just that, you know, you can go broke several times before you hit that 24x. So you got to be pretty careful. And
do you think they have a moat?
I don't think they need one. You know, I think that, you know, moat is a funny word. I had a bunch of friends at American Express who were investors with me that Buffett was a big investor in American Express, and Buffett visited Amex. And this is like an off the cuff, unrecorded kind of like chat. And Buffett's done a lot of these. And if you collect little tidbits you hear from people, it's kind of fascinating what he's not said publicly. And for moats, he said, you guys have a moat, but what's a moat? He said, moat is when the customer uses a different part of their brain to buy the product. Right. What does that mean? You know, well, the part of my brain that buys the product, when I look at, I don't know, a software service, I look at the price and I sort of say, I don't know, is this worth it to me? Do I want to pay $9.99 a month for when you see the Gucci hat and you say, I need that. I don't care what the price. What's the price? You're already at the checkout and you look at the price. You know, you need it. You know, I don't care about fashion myself, but you know, the point is, you know, there's a different part of your brain that's operating. And I think hymns, it's tricky. You know, on one hand, it's kind of a different part of your brain, but on the other hand, it's not. I think that their brand name is very valuable. People know hymns, they trust it. But on the other hand, I mean, somebody else could erode it over time. Their job is to build it and get it to a point where nobody can do that and they make a fortress. So far, they've done well. We know hymns, there's Roe, but like the amount
but you don't like it at 55.
I think it's okay. Yeah, I think it's okay. I think it's actually kind of cheap too because they're actually growing cash flow really fast. But all of Wall Street's really pessimistic because no moat, you know, what's going to happen after GLPs, et cetera. But if you just take a step back and say, does this management, they've grown sales. So what's amazing about these kids?
because they're really young. Look at revenue 5-6 years ago. They barely had any. They have $2 billion in revenue now.
Yeah.
They went from like 50 in revenue to $2 billion. Who does that? Can you do that? Can I do that? I've never done that. You know, I made a $2 billion company. We never went from start to $2 billion in revenue. Holy moly. You know, who does that? You can, it just shows you that these people know what they're doing. Now, again, you got to watch it like a hawk, but unlike Palantir and Tesla and even Robinhood Baby, the valuation on him is quite reasonable. The price to cash flow is like 20 times. It's really not, you know, some wild number. You know, there's a lot of philosophies, and some people can make money trading the psychology. I like to make money the way I've shown you for months and months, which is to sort of do my research, look at what I think is the fair value. Now, what is fair value to me? Fair value is the price a rational owner, a rational trader, really an investor, would pay to buy the whole company. Not to trade 500 shares, but to buy the whole company. Something I've done many times in my career. And if you look at how Buffett operates, right, he's gotten so good at capitalism that he can only buy whole companies, and he can only buy really big companies. Even early in his career, he was buying companies. Just 6 or 7 years into his career, he was buying full companies. That's how good he was, right? And Buffett didn't have special access to some zillionaires. A lot of his investors were guys in his neighborhood. You know, you can go from zero to hero if you're very, very good at what you do, and you're very disciplined. People will look at you and say, wow, I want to give my money to that guy. He knows what to do better than I do. And he seems like he's got a good head on his shoulders. You can do it too. But, you know, that's the value investing style. That's the private equity style where you say, this stock can't trade below, Sarepta can't trade below 35. Guess why? I would buy every share outstanding. That's why it can't trade below 35. You know, that's where PE redraws the lines. And there's no answer in technical analysis for PE. There's no answer for takeovers. The price is gone. The line is gone. So that's why I think technical analysis doesn't really make sense. Or market psychology, right? Even market psychology doesn't make sense. The best thing you do is an exploit market psychology. Well, like I said, IoT, so Buffett doesn't worry about the market seeing anything through, right? Buffett worries about when Buffett buys a stock that's below fair value, he's not buying it for a return to the green line, right? This is really important. Why is Buffett buying, when Buffett buys a stock, why is he buying it? Ken's got it, cash flows. He's not buying the stock because he's hoping the stock price goes up. That's silly talk. He doesn't care about the stock price. He needs the cash flows. He wants the cash flows. So let's say you got successful at biotech investing. I know people that have done that, right? That have gotten so good at investing in biotech, they got a big stash of money. Now, let's say they bought all of Sarepta. They owned all of it. So now they don't care what the stock price is going to do. There is no stock price anymore. They own all the shares. Stock price is meaningless. What do they own? They own a bunch of drugs, right? Well, what's the use of owning a bunch of drugs? The cash they'll generate, right? So if the company does $4 billion in revenue and has $1 billion in costs, that's $3 billion a year in cash flow, right? And if you bought all that for $3 billion, well, you probably made 10 times your money if you discount the cash flows. And what's more important? What some traders think in a market, or you making that cash flow? Well, obviously to Buffett, you know, his whole game is how much cash flow can I make? The value of my company is how much cash does it generate every year, right? It's not what do some traders think. Let the traders give me a gift. They're giving me a gift. They're saying, Mr. Shkreli, Mr. Buffett, or whatever your name is, Mr. Chat, I want to give you $1 every year for the next 20 years. And you say, well, how much, Mr. Market? How much? Is that going to be $10, $20, $5? And Mr. Market says, well, for Sarepta, it's $1. You say, you want me to buy a stream of cash flows of $1 or more every year for $1? And Mr. Market says, yeah, I'm willing to sell you that for $1 right now because I'm losing my mind. It's okay. And you buy the stock that somebody else sold at 35 or whatever it is. The point of investing down the road. Now, you might listen to this and you say, Martin, I got 50 grand. You might listen to this and say, Martin, I got 5 million. How am I going to buy a whole company with 5 million?
And 5 million is probably more than most guys here, but I'm sure for some of you it's less. But for most people, it's more. That's nothing. I can't buy big companies with that. Well, no, you can't buy big companies with that, but you could buy small companies theoretically. But the key thing is whether you're buying the whole company or not, that you still think this way. And if you stay thinking this way, you'll continuously succeed to the point where you are buying small companies. And then like Buffett, you'll continue to the point where you're buying big companies potentially. But what most people do is they give up. They start thinking about market psychology and market timing, and they stop honing their most important thing, which is, what is this value of this company? Can I get these cash flows for a discount? And the compounding takes care of itself. So that's the theory. Dividends are a payout of cash flows, but cash flows are generally held within the company. Cash flows is profits, net income, EPS, basically.
Why am I so anti-remote work? It just doesn't make sense. Work happens at the workplace. That's it. Period. The end. You don't like that? You don't want to make it? Yeah, I don't care. You guys can figure out how to do it. Good for you. I don't work that way. I don't even think my colleagues should go home. You shouldn't even have a home. Yeah, practically live in the office. Agreed. You want to make a startup? You want to be rich? That's up to you, man. I know how you operate. You want the easy life. You don't want to be rich. You just want it easy. Because it hurts. Oh, it hurts. It hurts my brain to work this hard. I need a break. No, I need a break. Get back to work. I need a work-life balance. That's cool. Listen, I mean, if you want to focus on your family, great. Stay away from me. You think they build PayPal by focusing on their family? You think they built OpenAI by focusing on other things than work? I mean, there's a difference. Do you want to be special? Do you want to be an outlier? Do you want to be something people talk about? Someone people talk about? Someone legendary? It's not going to happen with work from home. Never say never, by the way. You know, there's always exceptions to the rule. Remember, some companies have moats that allow them to have that kind of luxury. If you're at a startup, it ain't happening. If you're at IBM, IBM's got the, you know, or whatever company, you know, pick your poison. They could shut the business down for 6 months and nothing would happen. Our end, that's why we dead any office politics. I hear office politics, I'm like a bloodhound. Come right to your face. I say, I heard you have beef with Cindy. I'm gonna squash the beef right now. Cindy, get over here. I want you two to kiss. I'm kidding. Kidding about that part. I want you to shake hands right now. Look each other in the eyes. Do a trust fall. You guys know what a trust fall is? I'm HR, I'm legal, I'm sales. Only thing I'm not is engineering. Listen, man, I know what it takes to win. I wish I could work from home and become a zillionaire. I wish. Of course I want that. Who wouldn't want that? But listen, in the startup game, it's not about what you can do. It's not about what's possible. It's about guaranteeing the success. It's about not losing under any circumstances. That's what it's about. Can you do it? Yeah, I'm sure you can. I'm sure you might be able to. But why reduce your chances of success, right? Why would you do that? Why would you make it harder for yourself? Anyone else like this stock? They think it's going to go up? Just hit the request button. I appreciate the psychology part of it. I think that's very important to some traders and some investors. Like I said, there's a lot of ways to game the market. That's one of them. There are people who make money in the market. They don't even know what the companies do. They just hear the beat of the market. They have their ear to the ground. That's wonderful. That's not what I do. I'm a fundamental analyst. I look really deeply into the technology of the companies. I look at the valuation very closely. That's how I trade the market and make money in the market. You know, I don't begrudge somebody for taking a different approach. That's totally fine. You know, and two traders can be extremely profitable and have totally different viewpoints. My friend had dinner with Warren Buffett, and he hears me talking about all kinds of investors I either envy or I invested with or I hate or whatever. And I talk too much about this stuff. So he asked Buffett, what do you think about Renaissance? What do you think about Soros? What do you think about him and her and this and that? And Buffett said, look, you know, and he kept asking him, and, you know, Buffett's a super nice guy, but he said, look, my friend Pedro, He said, look, Pedro, I don't really care about what other investors do. I'm sure some of these guys are probably even better than me. But at the end of the day, I do what I do. I'm comfortable doing it. It's obviously worked for me. I'm going to keep doing it this way, and I'm not really going to change it. And that has worked for Buffett. I'm not comparing anybody here to Buffett or anything like that. But the point is, having a style that says, I'm going to do this and I don't like tech stocks. The guy's never owned a tech stock other than Apple. And I'm still going to make a lot of money. Well, a tech investor is going to look at that portfolio and say, what the hell is this? This is stupid. But of course, it's worked fine. So it's certainly not, something that's, you can't exclude other people making money. It's just a style that you like, and it could conflict with the style that somebody else has. And, that's something that every investor has to appreciate, I think. Listen, I know what it takes to succeed. I've done it before. That's why you know my name. I built billion-dollar companies. I know how it is. And it doesn't come because people aren't motivated or excited. There's one thing that's going to motivate somebody and keep them working Saturday and Sunday. They own 4% of the company. They own 2% of the company. They own 1 basis point of the company. Why would they work? I wouldn't. Would you? You might clock in, but are you going to work overtime? Are you going to... Who needs equity on 300K starting salary, Anthony? Well, let me tell you who does. Someone who wants to get rich. Not somebody who wants to have a high level of income, work-life balance. I'm talking about somebody who wants to be, I want to make 30 million. I want to make 50 million. Someone who wants to make real money. 300K, yeah, you can make more money than your friends. You might impress some girl, but you ain't buying no baseball team anytime soon. And yes, that's a bunch of people who work here who want to learn how to build a business. Whether or not you're actually learning that from me, yes. Some days I feel... Actually, I'm probably a better entrepreneur. I've said this many times. I'm a much better entrepreneur than trader, but I'm also a very good investor. Trading is something that's hard for most people. It's not easy. Even the best traders get washed up pretty fast because the eras change, and what worked in one era changes quickly. I think I'll bring the company public. I probably will pass the torch to a less controversial CEO at some point. Not soon. But once we get to like a couple hundred people, maybe 500 people, I could do something else. I don't have to be